Good afternoon. Let's do some business here. We are doing it live and doing more at 4 weekday afternoons. We get right down to business with the News Driven Hour right after Ben Shapiro and just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money, live on the air, 790 KBC, streaming live online worldwide at kbc.com. And yes, your on-demand podcast at kbc.com, Apple, iTunes, all your favorite podcast platforms. Stocks ending higher today, another choppy trading session in reaction to a softer than expected reading on the job front, reinforcing bets that the Fed will still be able to cut interest rates perhaps later this year. The Dow coming in for a closing gain of 140 points at 38,711. The S&P 500 rose 8, and the NASDAQ edged up 28 points. That reading on jobs today we got was the job openings reading for the month of April, falling to a more than 3-year low of around 8.1 million. That was below what analysts were expecting. April's level was the lowest seen in more than 3 years, by the way, a sign that the job market is cooling as the economy slows down. The yield in the 10-year note, which impacts fixed-rate mortgage rates, pulled back today to 4.33%. And based on the Fed funds futures, we're seeing and now expecting the Fed to begin lowering its benchmark rate in September with a chance of a quarter-point cut by September, seen at just about 55%. We saw real estate stocks rally today in reaction to those lower benchmark yields, which impact the fixed-rate mortgage rates. In fact, real estate posted the biggest gains among the S&P 500's 11 sectors as interest rates in the bond market fell. Also, we're watching shares of Carnival Corporation, the big cruise line, moving higher. The parent company of several cruise lines, in fact, more than a dozen cruise lines, shooting up sharply today. Carnival Cruise shares up nearly 6%. On news, the company said it was closing its P&O Cruises Australia brand and folding that business into Carnival Cruise Line. We did get new readings on real estate today. We'll get the latest straight from the source. Dr. SELMA HEPP will be joining us live later this hour, the chief economist at CoreLogic. The search continues for suspects in the murder of 37-year-old actor Johnny Wachter, who was killed in downtown Los Angeles about a week ago when he discovered his car was being stripped of its catalytic converter in the middle of the night by several thieves. I'll talk about what happened with Susan Shelley, columnist for the Southern California News Group, who has just written a powerful op-ed article about what happened, titled Johnny Wachter Was in the Wrong Place at the Wrong Time, California in 2024. But first, on your money, the markets, the economy, and the whole works now. Joining us live, money manager, investment expert Ken WINANS, president of WINANS Investments, market historian, author of Investment Atlas 1 and 2, Forbes magazine contributor, and longtime contributor to Mottek On Money here on 790 KBC. Ken WINANS, good afternoon to you, sir.
Likewise, Frank. How are you today?
Very well, very well. It's a beautiful day here in Southern California and an up day for the market. We also meant to mention Bitcoin back above 70,000. I know you follow the cryptos too, so a lot to talk about here. Give us your assessment of things here at the moment.
Well, it was, although we had the S&P and the Dow and the NASDAQ up, it was interesting to see that the S&P 400 and the Russell 2000 both were down quite a bit on the day, and I think it was tied very much to that jobs report that came out, and also just the general concern that these kind of companies are typically more tied to the domestic market than the global market, and maybe because with the economy slowing down, that's going to have an effect on those kind of companies. But, Frank, we are in that summertime. It is that hem and haw of things going on. June particularly is not necessarily a real great month. It does mean, it certainly does not, well, let me tell you, it doesn't mean go out and sell everything. What it does mean is that if things are not moving at this point in time in the right direction, it's probably wise for people to harvest their losses early and begin to look for other things to buy. You mentioned real estate stocks. I know I've been talking about it quite a bit for many months. There's clearly going to be opportunities in the market in spite of what might happen with a general lackluster situation. But, Frank, going to the interest rate scenario, we're going to have this tug-of-war all summer long between economic weakness and inflation. And I still think I'm going to be in the camp that the Fed probably will not do much in between now and the election unless the economy really gets ugly, which none of us obviously want that to happen.
All right. Look at the Magnificent One. Looks like NVIDIA hitting a new high again today, up another 14 to $1,164.37 a share at the close. And What about that one, which continues to rack up record highs?
Well, I think it's going to like everything else. A lot of people said I'm not real happy that I'm going to be forced to buy into something that's up, but here it is. It's up 6.5% just this month, which is 3 trading days into the month of June. I would just simply suggest this. There's a couple of ways that traders handle a stock like this. If you think there's very little that's going to stop it, don't buy a full position, buy a half position. And if you decide to go in really believing in this, then I strongly recommend you have a point, whether you use a stop loss order, which is a preset point to sell, or you mentally have the discipline to hold it, that if you somehow commit the unforgivable sin of buying something near the top, you don't get hit on the way down. But, yeah, by all means, you're up 135% on the year. It is powering way beyond most of the other tech stocks. It is what it is. Now, AI, let's briefly talk about this. I get asked a lot of questions about this. Rome was not built overnight. You're not going to have AI suddenly supercharge everything immediately. It takes time for technologies to adapt and to be implemented into the business picture. I think a big part of that job report we just talked about is that companies are looking at ways to reduce the headcount and basically use technology to perform services. I know when I go to a fast food restaurant, I'm noticing now I have to place the order on the screen. You no longer can walk up to the counter. So I think things like that are going to continue to make NVIDIA and the other AI-related stories palatable throughout the rest of this year.
Sounds like you're getting excellent training, Ken, right? We go to the restaurants now, and the employees there train us how to order, and go to the grocery store. We're trained on how to check out, and the list goes on. So we'll probably see more of that, right?
Well, unfortunately, yes, Frank. I go back and think about, certainly I probably was in this camp. You were in this camp. It was a lot of our first jobs worked in restaurants. But because we have had these mandates forced on us at a state level, as we know, California has the minimum $20 an hour wage, it's forcing the companies to make adjustments. And then today, a lot of the stocks that I'm looking at that I want to give as my recommendation are restaurant and retailers, which clearly will benefit from any kind of automation. But, yeah, you're 100% right. When I went to a McDonald's not long ago, I was trying to figure out how the heck to get my receipt out of the thing. And I had a young child come up to me and say, "Sir, it's down there." And lo and behold, they were right. So you learn something every day.
And a lot of this attention focused on California. We did get the news, which I mentioned already yesterday, that Rubio's Coastal Grill, citing business costs, abruptly closed 48 restaurants here in California due to the rising cost of doing business here in California. This is a California-based restaurant chain known for fish tacos, among other things, closing nearly 50 stores now, or 50 restaurants here in California, most of them here in Southern California, by the way. So we'll have a lot to talk about when we get to those restaurant names. And now I want to mention Apple here, too, which, by the way, is near its all-time high. Apple has rebounded nicely recently, up around 194. What about Apple here, Ken Winans?
It was interesting. I just went to AT&T yesterday because many of the audience knows, I have relocated to Las Vegas, and I wanted to go get a new phone and with a new telephone number. And I was shocked to see how much they are discounting the Apple 14 and 15 phones in light of new products coming out. But they were practically giving away the 14, and the 15 was nowhere near that eye-popping $900 price that they originally came out with. Here's the thing about Apple. Apple needs to come up with something new and wow. And I think coming out with another phone is not going to do it for them. They're going to have to come with something else. I'm not going to discount that company. They have an amazing way about coming up with things. But when I look at Apple, it's basically up a whopping 1% on the year. Now, it's up 50% in the last 18 months, but it's clearly not keeping pace with a lot of the other tech stocks. So although it had a good day, again, you just have to be aware it is just not keeping up with the overall market. I actually trimmed my Apple positions in my portfolios about 3 months ago, and I redeployed the money into some other stories like NVIDIA. So you just have to be aware trend is your friend in this kind of market, and you want to stay with things that are trending.
All right, let's get to the exciting stuff now. Suddenly, crypto people are talking about that again because it's certainly more fun when it goes up. And we see a Bitcoin back to 70,000 here, up more than $100 to 70,000 597 here at last check. Ken, I know you recently got your credentials in the crypto space. So what's your view on what's happening with Bitcoin and the other cryptos here?
Frank, as much as it's funny because I've used Bitcoin to do transactions like a lot of other people have. But as far as where I would want to place stakes right now, I just like the Ethereum situation better. Only that the ETF world is focusing on that. And again, I know for a lot of people, they might not be aware of this, but Bitcoin and Ethereum, their structures are different. There's a different platform entirely. They were programmed using different languages. There's a lot of things not to assume they are the same. So I would just tell anybody looking at crypto in their portfolios, like I said before, I would be more inclined to look at Ethereum right now for moving forward faster and harder as the ETFs start coming out.
All right, Ethereum now at around 3,816 at last check, up about $9. It got a pop recently on expectations that Ethereum 2 will have these ETFs. What's the expectation here on that, and what impact will that have if Ethereum gets ETFs like we saw Bitcoin get earlier this year?
I think it will have a dramatic effect. One of the things that still people to this day are puzzled, it's the halving of the coin for Bitcoin. That threw a lot of people into this mindset of, wait a minute here, whoa, what is going on here? We're going to have the coin, and yet it's not like a stock split where there's twice as many coins. Because Bitcoin has a hard rule, no more than 21 million coins can ever be produced. So it's really kind of odd, and it's scared a lot of people. Ethereum doesn't have those issues. So, again, I think that the moment of pause with Bitcoin is forcing people to diversify into other form of crypto. Now, me personally, I still think the real growth, and I'm hearing it from people who want to jump into crypto but are scared of the volatility, is in the stable coin area. And as you start having stable coins hitting the ETF complex, I think...
For the real story behind some of wrestling's biggest moments, it's Something to Wrestle with Bruce Pritchard and Conrad Thompson, too.
We got to talk about the crowd in France.
At one point, they sent out an emergency to everyone's phones stating that the decibel level was dangerously high. A few surprises, like singing Randy Orton's song. I was like, there are words to this song?
Something to Wrestle, wherever you listen.
The crypto world will grow, but I'm not necessarily think it's going to necessarily benefit Bitcoin. It's going to benefit the other cryptos that are along for the ride. So, Frank, it's volatile, as you know. I'm glad we talk about it. I have learned a lot monitoring it. But in my mind, I treat it like a commodity every day. I look at crypto like I look at corn, wheat, oil. I treat it in that sector. And it helps me keep it in that frame of focus on where it fits in my portfolio.
We're on there live with money manager Ken Winans. Appreciate that, Ken. And as you know, we speak to the biggest fans of crypto as well as the harshest critics and everything in between. So thanks for weighing in and advancing our education on that. And thanks for taking the time to study it and being a proficient in it so we can talk about it here. And what about the price of oil? Has seen a dramatic drop lately despite the upheaval and ongoing war in the Middle East. Oil right now just below $73 a barrel in New York. Ken, what about the oil names here, which have taken a hit? Chevron, for example, down again today, down more than $1 at 156 and change. What do you see ahead for oil, which had been fueling the inflation spike largely that we've seen this year?
It's actually really interesting that this is happening right now because typically the month of June is a very, very big month for crude oil and certainly natural gas as well. I mean, the energy complex moves during the summer months. So the fact that it's pulling back tells me that some of the release of these strategic reserves must be helping the market. Plus, to be perfectly honest, the refineries really wanted to get ahead of the curve this year on being able to have enough fuel. So clearly, we have enough out there, and certainly with oil pulling us back itself tells me that demand is in check. But I would say this. We all know oil is a very, very volatile commodity, and it's geopolitically driven in a lot of ways. I don't necessarily think this is the beginning of a downtrend. I think it's just simply a pullback off of the high. I still think pressure is to the upside when you look at anything that involves crude oil or refined products.
All right. And certainly fuel-sensitive names seem to have gotten a lift today. We see For example, the cruise lines on that Carnival News up nearly 6% today, and the Norwegian Caribbean Cruise Lines up 4%. Mixed picture for the airlines here, so some relief there. And let's get to what you were going to talk about here: the restaurants and any other specific places, Ken Winans, where you are putting money now and or taking it off the table.
Frank, part of my job as one of your commentators is to always talk about things that nobody else is talking about. And I look at the oldest retail and restaurant chains that have been around forever. And I am shocked to see that as a group, they're up over 7% on the year. Now, that might not sound like much, but that is rivaling a lot of the other groups that have been the hot groups. And when I look at the list, and I'm not going to talk about all of them, there's about 40 of these, but some of these names just are blowing me away. Walmart. Okay, big old famous Walmart is up 27% on the year. That's unbelievable. Costco up 25%. Going into the restaurant sector, all the negative that we're hearing about, certainly with what happened with Rubio's, Brinker International, better known as Applebee's, is up 66% this year. So again, I don't think you have to have all your money in tech or some other hot sector. You might want to look at some of these old, boring companies for some opportunities if you're trying to find places to put money that simply have been overlooked by the general public. I would say if you're looking at restaurants, I would take a good look at Cheesecake Factory, symbol CAKE. It's up 12% on the year, and they're expecting their earnings to be very, very good. Basically on the retail side, something as boring as Kroger. Grocery stores. I mean, many of them are, certainly in Vegas, they're all over the place. That company's up 14% on the year. So I think you can find some of these stories that haven't run away very far, and you can put money into them. If you're looking at a big, big name, many people might not know the name in California, Dillard's Department Store, symbol DDS, very big chain out in the South, especially in Texas. They're putting stores in these high-growth areas where a lot of people are migrating to, symbol DDS. It's been around for a long time, well run. They handled COVID beautifully. Take a look at names like that. I think that's where you can find some real value.
All right. What about, speaking of restaurants, I don't know if you can call it a restaurant, but McDonald's, we mentioned it earlier. What about McDonald's with a lot of attention focused on how the prices have shot up there, where you go through the drive-thru and suddenly you're driving away $30, $40 lighter. Ken Winans, what about McDonald's here?
McDonald's is lagging. It's down 12% on the year. I certainly in the long run, I think it will be fine, but it did stumble on a couple of its earnings. And I think a lot of it is that they are still going through the readjustment of their old model toward this new automation that we talked about earlier. I think in the long run, it will probably be fine, but I would lean toward a company that clearly is firing on all cylinders right now. And, remember too, Frank, that when you're talking about companies, you're talking about the haves and have-nots, the companies that have figured out how to work and operate in an inflationary world where, commodity prices are high, wages are going up, and those that have not. I still think McDonald's has room for improvement there, where clearly some of these other retailers and restaurants have figured out the game and they're doing well. One last name I would throw out there, The Gap. This is a name that people have been talking about a long time. Stock's up 29% on the year, and according to the projections I'm reading, a lot of people are going into the stores to buy summer apparel. Again, look at retailers. If you've overlooked them and you're underweighting your portfolio, go take a good hard look at them.
Terrific, Ken. Well, thank you very much for joining us live here. McDonald's menu items, by the way, up 40% compared to where they were in 2019. We did get that report recently. Ken Winans, money manager, president of Winans Investments, market historian, author of Investment Atlas 1 and 2, also Forbes magazine contributor, longtime contributor to this program. We always appreciate it. Ken, thank you very much for taking the call here this afternoon.
My pleasure, Frank. Take care.
790 KBC welcomes Yachtly Crew, the nation's #1 yacht rock band, coming to the Bank of America Performing Arts Center November 9th. Tickets are on sale Friday at Ticketmaster.com. Right now, caller 9 wins at 1-888-790-5222. You can get a pair of tickets to the show if you are caller number 9. Call right now, 1-888-790-5222. Get a pair of tickets to the show if you're caller 9 right now, furnished by Niederlander Concerts. Mottek On Money continues here at 790 KBC. Update for the market. The Dow closing up 140 points on the second trading day of June 2024, we're back to 38,711. The S&P 500 of 8 at 5,291, and the NASDAQ of 28 at 16,857. All the major averages still pretty close to the record highs we saw in the month of May. The yield in the 10-year note has eased to 4.33% on a weaker than expected jobs listing report we got today. The crypto's moving a bit higher. Right now, a Bitcoin of about 100 at 70,600. We see Ethereum up 9 at 3,816 and Doge at 16 cents. Among the winners today, shares of Carnival Cruise Lines up nearly 6%, Norwegian Caribbean Cruise Lines up 4%, NVIDIA at a record high of 14 and change to $1,164.37 a share. Apple also moving up slightly, up 32 cents to $194 and change. On the flip side, the oil names continue to come under pressure as oil slipped again today, down 34 cents in New York to $72.91 a barrel. Chevron down more than $1 at $156.13. Checking gold now down 30 cents at $2,347 and change. Silver up 4 cents at $29.66 an ounce. Mottek On Money continues here in 790 KBC. The search continues for suspects in the murder of 37-year-old actor Johnny Wachter, who was killed in downtown Los Angeles about a week ago when he discovered his car was being jacked up and then stripped of its catalytic converter in the middle of the night by several thieves. Let's bring in Susan Shelley now, columnist for the Southern California News Group, who's written a powerful op-ed article about what happened, titled Johnny Wachter Was in the Wrong Place at the Wrong Time, California in 2024. Susan Shelley, thank you very much for taking the call here, and tell us about what you've written in the Daily News and the Orange County Register and all the papers covered by the Southern California News Group.
Well, this is such a preventable, avoidable tragedy. You know, so many people have had their catalytic converters stolen because metals prices went up and they have precious metals in them, and they can be worth hundreds of dollars to a thief. And then you can have organized rings of people who are cutting them off cars and selling them, and it becomes a big business. And if we don't do anything to stop it, then you wind up with people who are going to shoot the witnesses to this kind of crime. And that's what seems to have happened here. Johnny Wachter was leaving a shift at work. He was working as a bartender because everybody has economic hard times. It's not just people who steal catalytic converters. Lots of people do other things when there's economic difficulty and they need to pay the bills, they work. But no, we have organized crime in California, and the government treats it as if it's an economic problem. We had 3 laws that were passed in 2022 that essentially said we're going to put this on the recyclers, and we're going to make it a crime for them to buy these catalytic converters from anybody who doesn't show proof of ownership. And there'll be lots of documentation requirements. So they put this all on the businesses, but they didn't do anything to the thieves. And as we know, in Los Angeles, people don't get prosecuted for things that are considered just, quote, nonviolent property crimes. Victimless property crimes. Well, for the people who have a catalytic converter stolen, it's certainly not victimless. It can cost them $1,000 to have that replaced if the parts are even available. And here you have this situation where the city council in Los Angeles passed an ordinance just barely last April of 2023, just barely with the minimum required votes.
The Bigger Pockets portfolio of podcasts are worthy of your investment.
And to a first-time home buyer, a $15,000 bill in the mail could be devastating.
New episodes available every day.
I would be shocked if our supply problem was fixed by the end of the decade.
Bigger Pockets, On the Market, Rookie Real Estate, or Money Podcast.
Wealth is not built in your comfort zone. It is not easy or comfortable to build wealth.
The Bigger Pockets Podcast, on YouTube or wherever you listen.
They made it possession of a detached catalytic converter a misdemeanor if you don't have proof of ownership. And at that, 4 or 5 of the city council members voted no. Nithya Raman said it's Toyota's fault because they made them too easy to steal, and we should come down on the manufacturers for not making them harder to steal. And Ulysses Hernandez said this is just going to cause problems for low-income people, particularly blacks, Latinos, and indigenous people. What is that? What kind of racism is that, to say that people who need money are going to steal catalytic converters if they're black, Latino, and indigenous? That's so offensive. And then you had Marquise Harris Dawson, who said that this is going to cause police to stop Black and Latino drivers to check to see if they have a detached catalytic converter. And for these reasons, these city council members voted against a law that did the absolute minimum, which was make it a misdemeanor to possess a cutoff catalytic converter. And, you know, in California, crime is real. This is not a sociology project for criminals. This is real, and it's a threat to everyone's life and liberty that this is allowed to continue so that it becomes a bigger and bigger business and more entrenched. And we have to stop these politicians from closing the jails and closing the prisons and having this care first mentality where no one is ever going to be locked up for a crime, as if everyone's just misunderstood and in economic difficulty, and that's why they're stealing things and killing people. We have to get over this idea that it's a big sociology project. It's a failure.
On the air live with Susan Shelley, columnist for the Southern California News Group, and also host, by the way, the Howard Jarvis radio show, heard Tuesday nights on 790 KABC, as well as our great sister station in the Bay Area, KSFO. Susan Shelley, thank you for laying it out as you did in your article and just now live on the air here. Again, if anyone wants to see the article, it's headlined, "History May Record that Johnny Wachter was in the wrong place at the wrong time, California in 2024. And talking about this craziness going on with the catalytic converters, and now it seems all metals are up for grabs with the news today of these fire hydrants being stolen, which are supposedly worth about $3,500. And so this is the latest part of this metals crime wave we're seeing here in Southern California.
Yes, so we already know that people are stripping the copper wire out of streetlights, and Los Angeles' response is, well, we're going to get solar streetlights, which cost us a lot more, but they have no street value. That's what the Bureau of Street Services says. They have no street value because they have no copper wire. This is not the way. This is not the way that Los Angeles should be dealing with crime. We should be going after the people who are committing crimes and not charging more money to the victims of them.
Yeah, and as you accurately point out in your article, getting back to this tragedy involving the murder of Johnny Wachter, none of these pathetic, as you write, regulatory tinkers that you referred to, these various measures that were passed were sufficient to save the life of actor Johnny Wachter, who returned to his parked car in a downtown L.A. street just in time to witness the theft of his catalytic converter in progress and was shot to death by one of the three thieves, which they're still looking for the thieves. No suspects at this time.
And even if they were arrested, do we even know that the charges would be that felony murder charges would be brought against them? For all we know, George Gascon would find extenuating circumstances. Oh, they didn't mean to kill him. Who knows what he would do? But we don't feel safe in this city because we're not safe. We're not safe on Metro. We're not safe walking in the Venice canals. We're not safe anywhere in Los Angeles. And you cannot have a city run this way, where you're trying to get people to use public transit, to have walkable communities, to ride their bicycles, and you've got this open tolerance for crime. It's only a property crime. It only happens when there's economic hard times. We have to stop the politicians who think like that. And we certainly have to stop them from saying that law enforcement targets Black and Latino and indigenous and low-income people. Law enforcement targets criminals without regard to race, and we have to stop pretending that we can not have law enforcement as our way to a safer society. This is just twisted, and it's failing, and it's a tragedy for Johnny Wachter that he was victimized by it.
On the air live with Susan Shelley, and just a horrible tragedy when, as you mentioned, here's a guy who was well known on General Hospital and some other shows and movies and so forth. And we all are doing what we have to do to make a living these days in Los Angeles. He worked as a bartender in downtown L.A. and came out at 3 in the morning and found these guys stripping the car of the catalytic converter and was shot and killed right there on the street. And the killer is still on the loose out there, which is very, very disturbing. I discussed this with the Honorable Dennis Zine last evening. It's just a total outrage, and we hope that they nail those people, and certainly just an awful tragedy, Susan. Well, you've laid it out very effectively, as always, in your op-ed article in the Orange County Register, the Daily News, and the other papers that are covered by the Southern California News Group, and we do appreciate it, and we'll be tuning in for your program. right here on 790 KBC as well. Susan SHELLY, columnist for the Southern California News Group and host of the Howard Jarvis radio show, heard Tuesday nights right here on 790 KBC, as well as our great sister station KSFO in the Bay Area. Susan, thank you very much for coming to the line this afternoon.
Thank you, Frank.
Friends, people like you and me have our ear to the ground on all things business. We like to be informed and indeed well prepared. As important as finance is, I want you to have a plan in case you're hit by someone not paying attention to the road. Thinking ahead serves us well, and even still, we can get caught off guard as people are so focused on their destination that they might not have a plan if they're in an accident that is not their fault. That's why I encourage you to put my friend, Attorney Clark Fielding's number in your phone. That number is 833-88-SHARK. So if you're in an accident, you'll be ready with your strategy to make Clark Fielding your very first call. Fielding Law aims for the highest possible settlements, considering you might need long-term care, rehab, compensation for lost wages, and any ongoing physical or emotional pain. So if you're hurt in any kind of accident, call for a free consultation with Fielding Law. You can trust them. They're honest, respected, and your strategy in case you get into that unexpected accident. Motorcycle, truck, pedestrian, scooter, hit and run, boating, or bike accidents, you name it, the number to call 833-88-SHARK. That's 833-88-SHARK, or go to clarkthesharklaw.com. Echo Money continues here in 790 KBC. What's up, you ask? Well, the correct answer in L.A., of course, is nothing but the rent. And home prices, too, we might add. We got new readings on real estate today. We saw the real estate stocks, by the way, rally as the benchmark bond yields pulled back today, the ones that impact the fixed-rate mortgage rates. The yield on the 10-year note down to 4.33%. Let's get the latest on the real estate report out today. Right from the source, Dr. SELMA HEPP is joining us live now, chief economist at CoreLogic. Selma, thank you very much for coming to the line here. And take it from the top and tell us about the report that you released today.
Hi, Frank. Thank you so much for having me here again. Let's see. Well, home prices continue to go up. According to CoreLogic HPI index, annual increase in home prices was 5.3% in April. What's interesting, though, is that it's the same as was the month prior. So after 10 months of consecutive acceleration, a speeding of home prices, we are now seeing home price growth plateauing. In April, in particular, the rate of monthly gains has slowed somewhat compared to where it usually is during pre-pandemic. So we are starting to see the impact of these higher mortgage rates again. If you recall, mortgage rates started going back up in April, and they hit the highest levels that we've had since the fall of last year at over 7%. And that really did start to weigh in on the housing market again. And in many parts of the country, not necessarily California, but many other parts of the country, we did start seeing home price decline, that seasonal, the slight decline, which, it's not something you usually would see at this time of the year. But what was interesting for our region here in Southern California, of the top 10 largest metros, San Diego was actually on top with 9.9% increase. Anaheim region was slightly higher at 11%, but it's not the top largest metro, so that's why it didn't rank up there. But a lot of the markets here in Southern California continue to see strong appreciation, and that of in double digits. So.
All right, take a closer look at what the reading are you getting here in the Los Angeles area? Any pretty much up across the board here?
Yeah, in Los Angeles, home prices were up 6%. What we are starting to see is that those areas of Southern California that are more sensitive to rates, where incomes are more sensitive to higher home prices, you're seeing slowing of that rate of home price appreciation. So, for example, other than Los Angeles, Riverside, Bakersfield, even Sacramento, Fresno, those were the markets where you saw relatively slower rate of home price appreciation compared to these other ones that I mentioned earlier.
All right. Any bargains out there? Have you seen noticeable slowing or any declines at all in Southern California?
No, not at all. I mean, when you look at the monthly changes, they were in line with seasonal increases, even stronger in these top markets. So it's really, really hard to come by a deal, and I was thinking a lot about this today. because of some comment that I saw how, it's mostly higher income households that can obviously afford at this point. And so they are able to bid for those few homes that are available on the market, right? So we get this question a lot: who is still able to afford at these high rates and high home prices? And it's really, a story of haves and have-nots, have-nots. And so, that's who, and haves are the ones that are buying right now. And given that the inventory is still so constrained, despite some increases that, we have seen, and they've been very welcomed to the overall state of the housing market in California, it's still not enough compared to the pent-up demand that there exists out there.
Right, and as we've talked many times in the past, home affordability as well as availability, big issues here, certainly in this area, especially people having locked in the low fixed rates that we've seen in recent years and not moving. What about the inventory? What are you seeing happening here in the Los Angeles area?
Yeah, so we are seeing inventory increase, particularly among existing homes for sale, so the homes that are already have been built. Remember we have this big issue with new construction and lack thereof, and there's only a few markets where you do see new construction. And if, for example, Riverside and Bakersfield is one of our areas that you do see new construction, and that's where home price appreciation is actually slower as well. So where you have more inventory, you have more affordability and more people being able to buy. But overall, when we look at inventory, so it is going up, and it's going up in some of these markets that have been really locked in or almost frozen there for a while, especially in the Bay Area and some of the Southern California markets. So we're seeing some unthawing in the housing market in terms of the inventory, which I think, it's bringing more balance in the market, which we desperately needed. It's going to take a little while to get back to where we were in 2019, for example, and even then we weren't in a perfectly balanced market. But we're slowly crawling our way back there.
All right, and you also got your crystal ball out in this latest report. What do you see ahead for home prices, for mortgage rates, and for what's happening here in Southern California?
Yeah, so mortgage rates, that's a wild card, given everything that's happening with inflation and what the Fed is going to do. So I think consensus is for mortgage rates to start coming down. I think there's still a couple rate cuts in the play, especially given the latest inflation report. So with that in mind, I would hope for mortgage rates to come down by the end of this year. I think that consensus is about 6.5 by the end of the year. Now, given that mortgage rates have remained so elevated, we have revised our home price forecast lower, actually. Earlier this year, we were more bullish on home price forecast because we were expecting mortgage rates to come down lower, but given that they're not, we revised our forecast a little bit lower. Still, positive home price appreciation, so home prices continuing to go up. Especially, again, in these markets that tend to have more higher income households, a little bit more constrained in terms of inventory, a lot of cash activity as well, so maybe a little bit less sensitivity to mortgage rates, which would be Orange County, for example, Silicon Valley in the Bay Area, San Francisco. For LA, that's about 7% expected appreciation a year out from now. For LA, we have about 3% expected home price appreciation a year out.
Dr. SELMA HEPP, Chief Economist at CoreLogic. SELMA, thank you very much for sharing your latest report with us live here on Mottek On Money on 790 KABC.
Thanks so much for having me again, Frank. Talk soon.
Thank you very much. Look forward to it. Thank you very, very much. And an update for the market. The Dow 140 today, the S&P 500 up 8, the NASDAQ composite up 28 points, and the yield in the 10-year note, which impacts those fixed-rate mortgage rates, has slid to 4.33%. Stay tuned now for the 790 KBC News Blitz with Randy Wang, and I'll be back with more at 4 tomorrow afternoon on Mottek On Money on 790 KBC.
America starts the day with America in the Morning.
Pending home sales numbers, they tanked in April, but there are
Hi, I'm John Trout, your host for the latest news, politics, entertainment, business, and weather.
High-octane action in the dust, a new film puts...
Our staff of correspondents provide a fast-paced look at the world with specialized reports from where news happens.
It's a bird, it's a plane, it's Amazon.
Concise, accurate, and fresh each day.
America in the Morning, the podcast, available wherever you listen.